This is Josh Belk with the Belk on Business podcast. Today is going to be the third episode, and we'll do a few more on the big beautiful bill. And today we're going to talk a little bit about the R&E credit as well as changes as it relates to 1099 filings. So in previous weeks we talked a little bit about some of the campaign promises that were made as it relates to car interest, tips, and Social Security. And then last week we talked a little bit about the depreciation changes. And then today we're going to talk a little bit about this R&E credit, and then get into 1099, and then we'll pick up on another topic next week. So the first area we're going to talk about is the R&E, or the Research and Experimentation credit. And it's getting kind of hard for probably many of us in the profession to not call it R&D credit, but it's an R&E credit, Research and Experimentation credit, and talk a bit about about some of the compliance changes that relates to this, some of the rule changes that relates to this. So with this, we did have a few clients that qualified for the old R&D credit, but not too many of them. We'll probably have more of them that will qualify for this particular credit. So this particular credit, in order for you to qualify for the credit, and I'll talk a little about numbers here in just a minute, the credit only applies for certain types of activities that pass what is generally referred to as a four-part test. So there's four elements to determine whether or not that R&E expenditure indeed does qualify for the credit. The first test is the business component test. So it must be a new or improved product, process, formula, invention, technique, or software. Okay, so you kind of have those general areas, but there has to be the proper objection. So the objection to improve the function, performance, quality, or reliability of the business component. It's a little bit wordy. But I'll probably just put this in the show notes. But there's a business component test. It's out there kind of all over the internet as well. So it has to be a new or improved product, and then there has to be the proper objection. So the purpose of the expense, provided it is in one of these areas, has to be to improve essentially the function, performance, quality, or reliability of that particular business component. So it's pretty broad. It may be kind of one of those situations, kind of look inside of your business and see whether or not these qualify. Secondly, a technological in nature test. And so the research activities primarily must rely on the principle of physical or biological sciences, engineering, or computer science. Okay, so these particular areas, the test ensures that the activities are genuinely technological or scientific in nature, rather than simply routine business operations or improvements achieved through non-scientific means. Kind of deep. Okay, so if you're kind of in a situation, once again, you're going to have to evaluate and see whether or not that activity does qualify. So basically, if it's a situation where you can answer yes, that you can do it, develop it, and develop a design, both a method and a design, you most likely can use that expenditure toward the credit. Thirdly, elimination of uncertainty. So the activity must be intended to discover information or to eliminate uncertainty as it relates to capability, method, and appropriateness. Okay, once again, we have these terms. We have to make sure we have these things defined correctly, but the activity must be intended to discover information to eliminate uncertainty as it relates to capability, method, and appropriateness. Okay, then lastly, number 4 here, the process of experimentation. So all activities must be related to identifying uncertainty regarding the development of the product, process, or design, as well as utilizing a process. So basically, a lot going on here. If you have an activity that does qualify, okay, you want to make sure that whatever you do in that particular activity, everything within that activity also qualifies as it relates to the process, okay? So make sure that whatever it is you're doing indeed does qualify. It's not considered operational, something of that nature. It indeed is an R&E activity, okay? And then to make sure that when you go through the implementation, the development and the implementation, all of that is done correctly in compliance with this in order to be able to take the credit. It sounds more difficult than it actually is. Okay, so if it's one of those situations where you're inside of your business, you are doing some sort of research, you're doing some sort of a product development, something to this effect, then you may end up qualifying for this particular credit. So the Tax Cut and Jobs Act required these types of expenses to be either amortized over 5 years or 15 years, depending if it's domestic or foreign. Okay, so for domestic activities, now qualify for the full amount of the credit. Okay, the full amount of the deduction. Now it's situations where any sort of domestic expenses you can expense within that particular year. And then if it's foreign, then it has to be amortized over 15 years. So for businesses with under $31 million in average annual gross receipts for the 3 prior years can retroactively take the expenses and write them off over on 25 or on 25 and 26. Okay, so you can go back. So this is kind of one of the neat things about this. If you do qualify for the credit, you can go back as far as 2021, and if you had what was R&E expenses on there that you're amortizing, you can essentially go back. You can add those expenses on your 25 and 26. Now, larger businesses, so over 31 million, can deduct the unamortized expenses in 21 through 24 by amending the prior year's returns. So if you're under 31 million, you're not going to have to go back and amend. You're just going to take the rest of the expenses and go ahead and add them in. If you're a larger business over 31 million, you're going to have to go back and amend the prior year's returns. Now, if you go back and amend 21, you're going to have to amend 22 and 23 as well, because if you're taking the full expense in 21, now you don't have those expenses in the subsequent years. So you're going to get a refund in the first year, you're going to owe tax back in the subsequent years. You'll want to see whether or not this really makes sense. And this is going to have a lot to do with your, with your tax brackets, things of that nature. So you're either going to do that, or you want to evaluate just to let the expense go ahead and run out over the remaining life of over the remaining amortization life. So eligible expenditures for the credit include, so certain expenses as it relates to the R&E credit are included, others are not. Okay, so eligible expenditures for the credit include qualified wages, supply cost, contract research, directly related overhead cost, software development, certain indirect cost, and research funded by a third party. So they're pretty clear on what expenses do qualify and what do not. You're in a situation to where if you do have R&E expenses, you want to make sure that it falls under these particular categories. So something that might be a shared cost or an overhead admin cost not directly related would be excluded. So if you do have a credit, any unused credits can be carried forward up to 20 years. So eligible expenditures for the R&E credit include qualified wages, supply cost, contract research, and directly related overhead cost. And then there can be some indirect cost and research funded by a third party that can be included. Now, if you do end up with the credit and you have any sort of unused credit, then that remaining credit can be carried forward. And then eligible startups can use the credit to offset up to $250,000 in payroll taxes. Okay, so that's kind of a neat thing. So if you do have a startup, you hire employees, and you have R&E credits, they can use that credit as it relates to up to $250,000 in payroll taxes. The credit itself is 20% of the R&E expenses. Okay, so if you have $100,000 in R&E expenses, that credit could be $20,000, up to $20,000. Now, there are 35 states that do allow for the R&E credit as well. Now, I may have different calculations, whatever the case may be. So if you do qualify for this credit, you'll want to also see if your state also allows for either R&E credits or R&D credits. So the R&E credit, talk about that. Secondly, going to talk a little bit about 1099 compliance. So historically, anytime a business pays a third party over $600 a year, and I'll get into a little more detail here in a second, they would have to issue them a 1099. So the old 1099 miscellaneous, then they added the 1099 NEC for non-employee compensation. So if you have a 1099 NEC, you have somebody who's a non-employee contractor, then you pay them $600 a year. Historically, you would have to give them a 1099 miscellaneous or NEC. Now, currently, that rule has changed. So starting in 2025, that number goes up to $2,000. I know this will make a lot of our clients happy. They don't have to pay us to issue so many of these things. But so that threshold now has been increased to $2,000. There are penalties for taxpayers or businesses that don't issue 1099s. So I don't know how many times a year I say this to our clients. If you are bringing somebody on and they are a contractor, you need to get a W-9 from them before you ever give them a payment. Okay, you are required to have that on file, that W-9 on file. And so a trade or business should be collecting that W-9 before paying any individual, partnership, or estate that is not your employee that provided services. Now, this issue of who's an employee gets really confusing. Bottom line, if they don't receive a W-2, you're not withholding taxes, whatnot, they're not an employee. Okay, you have to be issuing them a W-2 for them to be an employee. Okay, so for 1099s, the threshold has been increased. The threshold for 1099 miscellaneous forms has also increased. So the miscellaneous is issued to anyone who received over $2,000 for such things as rents, prizes, awards, payments to an attorney, medical healthcare payments, and other income payments. That threshold has also been increased. Now, lastly, the 1099K. So if financial institutions that you think of like merchant accounts, sales, things of that nature, they're going to issue you a 1099K at the end of the year. Most of you that own a business, if you accept credit cards, sell things online, for example, you've seen this particular form, and you will begin to see this. You'll see this form going forward if they pay you over $20,000 during the year and had also over 200 transactions. So that particular number has been changed as well. So today, research and experimentation credit. And so if you do qualify, you'll want to make sure you have that conversation with your tax professional, do the work, see whether or not your activity does qualify and whether or not it's best to go back and amend, or if we want to go ahead and take those expenses over 25 and 26. And we talked about the changing amounts and the threshold as it relates to 1099s. Once again, this is Josh Belk. Have a wonderful day.